Have you ever noticed that the people who build billion-dollar fortunes rarely chase the next hot investment? While the world obsesses over finding the perfect stock, the greatest investors spend far more time mastering themselves. That's the hidden advantage most people overlook. Fortunes aren't built by one lucky trade. They're built by a handful of timeless rules followed with extraordinary consistency. The first rule is simple, but incredibly difficult. Think long-term. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." That isn't just clever advice, it's a psychological edge. Most people expect results in weeks or months. Legendary investors think in decades. They understand that wealth grows quietly, almost invisibly, before it becomes impossible to ignore. Like planting an oak tree, the early years show little progress, but beneath the surface, strong roots are forming. The second rule is to protect your downside before chasing your upside. Howard Marks often reminds investors that avoiding catastrophic losses is more important than maximizing gains. Imagine two investors. One earns spectacular returns, but suffers a devastating loss every few years. The other earns steady, respectable returns while carefully managing risk. Over 20 or 30 years, the second investor often finishes far ahead. Staying in the game is one of the greatest investing advantages. The third rule is to stay rational when everyone else becomes emotional. Markets rise on optimism and fall on fear, but emotions have destroyed more fortunes than recessions ever have. During major market crashes, history shows that some of the greatest fortunes were quietly built by investors who remained calm while others rushed for the exits. They didn't ignore the risks, they simply refused to let fear make their decisions. The fourth rule is continuous learning. Charlie Munger famously described himself as a lifelong student. Billion-dollar investors read relentlessly because every book, annual report, and business biography expands their understanding of how the world works. Knowledge compounds just like money. A single lesson learned today may prevent an expensive mistake years from now. The fifth rule is discipline over intelligence. You don't need to predict tomorrow's market. You need the discipline to keep investing during uncertainty, to resist following the crowd, and to remain faithful to a well-tested strategy. Consistency beats brilliance far more often than people realize. Perhaps the most overlooked rule of all is knowing what not to do. Legendary investors say no far more often than they say yes. They avoid businesses they don't understand, ignore speculative trends, and patiently wait for opportunities that truly make sense. Their restraint is a competitive advantage. Here's the truth that connects every billionaire investor, regardless of the era or market. They didn't become extraordinary because they discovered secret investments. They became extraordinary because they developed uncommon habits, extraordinary patience, and unwavering emotional control. Their fortunes were built long before the money arrived, inside the decisions they made every single day. If this perspective changed the way you think about investing, consider subscribing for more lessons on investment psychology and the timeless wisdom of legendary investors. Leave a comment sharing which rule challenged your thinking the most, because in the end, changing your financial future begins by changing how you think, and that's the investment that compounds for a lifetime.